Good morning, dear student. Today I am here for you and we will analyze a few peculiar transactions. Its concept is very important to solve accounting equation completely, and it is a frequent transaction you may get in any organization, and you need to be more concentrated. And after the class, I think you will get to more concept. Your concept will build up after the class. You can recognize that. So I will start here with the term outstanding expenses. Outstanding expenses, it means expenses due. Means the organization has availed the services but not paid the amount. The organization had incurred it for generation of revenue, but the organization has not paid it. For example, your employee has worked for the organization for a month, but salary has not been paid. So obviously obligation is here for the business and it will increase liabilities. See, now we know that every transaction has two-way effect, twofold effect. So one is expenses and another one is outstanding liabilities. Outstanding expenses is liabilities. So how it will be impact on accounting equation? Outstanding expenses will increase liabilities, and because the services has availed, used, so it will be treated as expenses and it will reduce capital, isn't it? So here you can see the effect is one-sided, only on liability side and capital, and equation will equal. Now come to the next one. Prepaid expenses. Expenses paid in advance. In advance means for coming period. You have made a payment. Your organization has made a payment. It is always asset because in future you can avail the facility and you need not to pay it again. For example, an organization has paid 1 month salary to its one of the employee. So for the organization in the coming month, that employee will work and organization will not have to pay for that. So prepaid expenses is asset. Obviously, when you will paid in advance, you will paid expenses in advance. The mode of cash or bank will be utilized. So how it will impact on accounting equation? Prepaid expenses is asset. So you have to open new head in the name of prepaid expenses under the head of asset. So that particular asset will increase and bank or cash balance will reduce. We can also take an example with the help of insurance, because insurance is paid in advance, isn't it? So prepaid insurance will be taken as asset until and unless the time come to an end for which the insurance has taken and the payment has made, so either cash or bank will reduce. So effect you can see here. Now accrued income. The word accrued means you have earned but not received, and it is an asset for any organization. How it will impact? Asset will increase and capital will also increase. So you can see the equation. Okay, and very simple example we can take that interest accrued on fixed deposit by any organization. Interest has actually not been received by that organization, but it will receive in future. So, but it is accrued income. That is asset. It will increase the asset, and it is a component of income. So it will also affect on capital. So capital will also increase, isn't it? Come to the next. Commission received in advance, or to say, I have taken a specific word here. The term is here, income received in advance. So any kind of income received in advance is going to create obligation, and it will be treated as a liability for the organization, because the organization has received the amount. So in coming time, in future, organization will have to provide the services for which the amount, the income has received in advance. So how it will impact? It will impact as increase in liabilities by that particular head, and cash or bank balance, as the case may be, will also increase. Come to the next. Additional capital introduced. See, it may be possible that the firm is in need of more fund, more capital. So obviously you have to study sole proprietorship business. So the owner will will have to introduce additional capital. So it has the same effect. The term is new, but the effect is same. Cash will increase and capital will also increase. Now a very important thing, depreciation. Depreciation on fixed assets. Before going to that one, although we have discussed in very first chapter, depreciation is called reduction in the value of fixed asset due to its wear and tear, changing technologies, due to obsolete of that asset. So now for a simple definition, you should keep in mind reduction in the value of fixed assets. Okay. So if a fixed asset is reduced, that is known as depreciation, and depreciation is also a kind of expense. It is a kind of non-cash expense. Cash will not get affected. So how it will impact? On which asset depreciation has actually been charged, the value of that asset will reduce, and it is expense, so capital will also reduce. So again you can see the same effect here. We can take an example of that. A furniture was purchased for 10,000 and 1,000 charged as a depreciation. What does it mean? Means after a year, the value of a fixed asset that was used is 1,000. So now the value of fixed asset, that is furniture, remains with the organization is 9,000, 10,000 minus 1,000, and it will also impact on capital. Capital will also reduce by 1,000. Interest received by bank simply it is income, don't worry about that. So it will have a same treatment as the income. Bank balance will increase and capital with that particular income will also increase. So again the equation will be equal. Interest on loan paid. Suppose any organization, the business has taken loans. Obviously loan is not available freely or free of cost. The organization will have to pay interest for using that amount of loan. So interest paid on that loan is on a kind of expenses. So again the same treatment, the term may be new but the treatment is same. Bank balance will reduce because you have to pay through check, and capital will also reduce or decrease. Now come to the next. Goods withdrew by proprietor for personal use or withdrawal of goods for personal use. See, one thing, a thumb rule. Anything withdrew from business for personal use should be treated as drawing, and the impact is as we have done earlier. So here goods has actually been withdrew from the business. It may be possible. So what is the impact? Goods has withdrew here, so goods will reduce and capital as a drawing will also reduce. We can take an example for this one. Suppose a television show merchant has taken 132-inch LCD TV from his business to his house. So obviously this will be termed as goods withdrew from business for personal use because it will be used in his own house. So what will impact in the business books of account? Whatever the stock of television, it will reduce by number one unit, and because it has withdrew, so capital will also reduce by the value of television, isn't it? Two more thing here given as number 10 and number 11, a most important thing. Sometimes it is very difficult to understand the concept as well. You can see a new word, interest on capital and interest on drawing. So first of all I would like to explain you interest on capital. What does it mean? Interest on capital, see, we have learned that business entity concept, according to that concept business is totally different from its owner, proprietor. So capital is also kind of internal liabilities. If you could remember my videos, I have explained it. So business is using capital that was introduced by the owner, so business will have to pay interest on that particular capital, isn't it? And business is not paying that capital in cash, so it affect a different kind of head. See the effect here. Simple, first thing, interest on capital is expense for the business, so expense always reduced from capital, and whatever the interest on capital was given, allowed to the proprietor, again it was invested in the business. It is assumption, it has to be assumed like that. So again it will increase the balance of capital. So it has only one effect on one head, and that is capital. Expense will be added, and again it has introduced with the assumption, so it will expense will reduce and interest on capital will increase the balance of capital. So here interest on drawing, when cash withdrew by the owner from the business, The business will charge this time interest on that drawing, and this interest on drawing for the business is income and expense for the owner, you can say. So how it will be treated? It is income. Income should be added in capital, and the owner has not paid it in cash, so the balance of capital will reduce. So again it will reduce from capital. So overall there is no effect for that one. Okay, different thing. Please revise the things. And these two are very important entries. Okay. Now come to the next. I have given you few transactions, selected you, only one is common for you, otherwise every transaction is different here. And I hope that you can now prepare accounting equation. Okay, here are 12 transactions given. I have already explained you. I can give you the solution as well, but not in this video. Okay, I hope that you can solve it right now. You are able, you have learned the concept, and now you will feel comfortable to solve accounting equation. I hope you have done previous equation as well. So solve accounting question for the given 12 transactions, and we are again meeting, and we will meet in next class with the solution of this question as well. Wait for that, but don't only wait, try, and I think you can solve. Till then, goodbye. Thank you.